Hey everybody, what's going on? My name is Kang, and in this video, we're going to be talking about 4 dumb reasons that you're not investing. But before we get started, let me know in the comments, are you investing right now? Why or why not? And while you're down there, please hit the like button as it really helps the channel grow. Alright, let's get started. Reason number 1, you're timing the market. Timing the market can be disguised through excuses like, dude, the market's so red right now, why would I bother investing? Or, my wife's boyfriend thinks the market's going to crash, so it's going to keep on dipping deeper, I'm going to wait until then. So these reasons basically stem from the idea of trying to time the market. But as we know, you can't time the market. It's impossible. And anyone who's telling you that they can time the market is definitely lying to you. Analysts and economists who are constantly analyzing market trends and have all the up-to-date technology and information are not able to time the market and are wrong most of the time. And if they can't get it right, how can me or you, the average investor, time the market when all we have is a Casio calculator and our news source being Reddit or YouTube? And even if you think the market is too hot right now and there's going to be a correction in the near future, why do you care? If your time horizon is long enough, this is all going to look like a tiny blip on a chart. So instead of focusing on timing the market, we should focus on time in the market. By consistently investing regardless of market price, we give ourselves the best chance of success in the future. Assuming, there isn't total market collapse and all stocks are worthless. But at that point, I think we have much bigger issues to worry about than our stock portfolios being down. Reason number 2, you don't understand investing or you don't have time to learn about investing. Investing may seem difficult and time consuming at first, but it doesn't have to be. There are a lot of tools and resources for young and new investors to get started, like this YouTube channel for example. And I think when people hear the word investing, they think that you have to constantly be putting in time and effort in order to make your portfolio successful. And while that used to be true, with the introduction of low-cost ETFs in the late 90s and even more recently with robo-advisors like Wealthful Invest, it's now easier than ever to start investing into the stock market. All it takes is a couple of hours of research to understand the basics of investing, and then you can get started without having to put in all that time and effort that was once needed. Number 3, I'll start investing when I have a real job. The money right now doesn't even count. I hear this one a lot with my friends that are students, but honestly, it doesn't really make sense to me. At the end of the day, money is money, and technically, the money you have right now is worth more than the money you would have later because of the opportunity cost of investing. Now, I know that there are exceptions because there are a lot of students out there that are not as lucky as I am or as privileged as I am to start investing this early in life. But at the same time, there are a lot of students out there that are just putting off investing because they want to enjoy their school years. And that is a valid argument, but wouldn't you rather be learning about this stuff now rather than later? By learning about personal finance and investing right now, you can have a plan and be confident with that plan before you start working or before your life starts. That way, you don't have to deal with the stress of a new job, moving out, paying off loans, and learning about your personal finance at the same time. At least if you start when you're a student, you're in the mindset to learn. You're already in school, so you might as well learn one other thing. Rather than when you start working and then you're filled with the existential dread of a 9-to-5 job. Which brings me to number 4. I'm not going to invest because the amount I have is way too little. People online talk about investing at a scale that seems unattainable. And I know when I first started investing, I was basically getting flexed on at every turn, going on YouTube or Instagram, seeing people being like, oh, I invested my first $10,000. And it was really discouraging to me. But I think it's important to remember that investing is a marathon, not a sprint. Everyone is on different parts of their financial journey, so you should be working towards your goals and not someone else's. If you can only invest a little, I still think it's worth it because the compound interest of something is better than the compound interest of nothing. And eventually, when you get a better job or you pay off that loan, you're going to be able to invest more. By that time, you've already built strong habits that you can build on, and you'll be far ahead of someone who had just ignored their small contribution amount and not invested at all. But on the flip side, I think that there are a lot of people that are over-invested in the stock market and are investing money that they can't afford to lose. Which brings me to some reasons that you should not be investing. If you don't have enough to create an emergency fund, I personally do not think that you should be investing. Now, this is my opinion, and obviously it's not going to be that big of a deal if you're living at home and have the safety net of your parents, but emergency funds are definitely an overlooked part of investing and personal finance. If you're investing for the long term, like 5 or more years, you don't want to be forced to sell your investments early because of a surprise financial crisis. That's why emergency funds are important. They protect you and your assets in case anything ever goes bad and you need some money. Additionally, I think if you might need that money in the next couple of years, I would rethink investing. I know the stock market's been doing pretty well recently and it's easy to get caught up in the FOMO, But what if the stock market doesn't continue to do well? And what if the next couple of years are years of red? By having the ability to leave your money in the stock market for 5 or 10 years, you can take advantage of the red periods by consistently buying the dip and investing regardless of the market price. And as a personal rule for myself, I don't invest any money that I need within the next 5 years. And the final reason that you shouldn't be investing is if you're trying to get rich quick. Like I said, investing is a marathon and not a sprint. And even though some people are lucky enough or skilled enough to become overnight millionaires and sprint to the end of the race, the chances of that being me or you are slim to none. And the reality is, if you're an average investor like me, which you probably are because you're watching a video from a guy that has less than 100 subs, you're much better off investing for the long term rather than trying to quickly flip your money. That's not to say that you can't have a small portion of your portfolio dedicated to short-term and risky investments, as long as it's offset by long-term, safer investments. I know firsthand how hard it is to ignore the FOMO that's constantly portrayed online. So having a small portion of your portfolio set aside for those riskier speculative investments is a good compromise in my opinion. But overall, there's a lot of reasons to and not to invest. And I don't want to make any fast and harsh judgments saying, oh, you have to invest because XYZ. Everyone's life and everyone's risk tolerances are different. So it's unfair for me to say that you should be investing when there's so many factors that are involved. I just wanted to illustrate some of the misconceptions that I think a lot of new and young investors have. And the sad truth of it is, we're not taught this stuff in school or at any point in our lives. We're just kind of expected to learn how to do it by ourselves, which is kind of messed up. The only person that's going to care about your future is you. So that's why I think it's your responsibility to take care of your personal finances and learn about this stuff as early as possible. And that's one of the reasons I started this YouTube channel. But other than that, thanks for watching if you made it this far. This one shouldn't be as long as the other ones, so hopefully more people made it to the end. If you liked it, please consider liking, subscribing. I plan to make a new video every 2 weeks, so hit the bell notification so you don't miss out. If you have any questions or comments, leave them in the comments below or hit me up on Instagram. But other than that, thanks for watching. I'll see you guys next time. Later.